Hello guys, and welcome to the White Rabbit Trading Channel. Before we begin, please take a moment to read the disclaimer below. Remember, I'm not a financial advisor and everything here is for educational purposes only. Alright, let's dive in. Let's have a look at the statistics for January. First, we see that it tends to close positive about 57% of the time, while closing negative around 43% of the time. The average gain for January is 23%, with a median gain of 16%. For smaller moves, the median is around 10%, while the average wick size is approximately 4%. On the bearish side, the statistics show an average move of around 16%, with the median very close to that. The smallest average move is about 13%, and the average bearish open to high wicks tend to be slightly larger, coming in at around 13%, with a median of 11%. These averages help us understand what to expect for potential price behavior within the month. Now, let's translate these statistics into potential levels. A monthly bullish wick would be around 89K, the smallest average move would point to 102K, the median level would indicate a slight new all-time high, and the average gain would suggest levels between 114K and 115K. On the bearish side, the average open to high wick is around 104K, and the overall average move suggests 106K. For smaller bearish moves, the average is around 81K, while both the median and average point to levels below 80K, at approximately 77K to 78K. What's interesting here is that a bullish wick or bearish wick, along with some of the average moves, would still fall within the current range. However, if there's a breakout, levels could extend even higher. On the other hand, if we see the average loss, it would indicate a much deeper move below this range. For a bullish continuation, seeing such a deep move wouldn't be ideal, but the numbers are there, and we must remain open to all possibilities. It's always important to adjust the plan as things play out. What stands out this month is that the smallest average move and the potential bearish wick formation are close to each other. This opens the door for a bullish move, but caution is needed since it could simply mark the high of the month before moving lower. On lower time frames, we need to monitor the structure and levels closely to determine what gets hit first. For example, if there's an early move lower to the wick level, it could indicate the formation of the monthly low and complete a correction of around 20%. Of course, a 25 to 30% correction would align more closely with the average losses for the month. Alternatively, if the price rises first, it could indicate that Bitcoin is forming the monthly high before heading lower. Of course, invalidations exist for each scenario. If the price moves sharply outside of the expected range, it could indicate a new trend forming, and we'd need to adjust accordingly. For instance, if the price moves down from here, I'd look for setups. However, if the level is lost, it could signal more than just a deviation, it could become a bearish retest, leading to continuation to the downside. Similarly, if the price reclaims a level or rejects it but forms a higher low instead of new lows, it could signal continuation to the upside. That's why it's crucial to observe how the data develops and watch for signs of strength or weakness while keeping potential monthly levels in mind to form a bigger picture. Now, let's move on to the support and resistance levels and the timing for highs and lows. On the levels I showed last time, we can see that deviations are possible. Price could move outside the range and hit the monthly average wick or volume block levels. If this happens, traders need to be prepared for scenarios like front-running, sweeping local lows, or shallow SFPs. Ideally, these moves would hit a support level and take out some stops, as this often completes business in the market. If price rises from here, it could go for the monthly average level, form a bearish wick, and then reject, potentially returning to lower levels. At that point, we'd need to see if those levels hold or break. It's also possible that price ranges between these levels for some time before deciding on a bullish or bearish outcome. Beyond these levels, there's a fixed volume range that aligns nicely with the levels, potential deviations of the lows, and a retest of the value low or high. This also lines up with the smallest average and the open to high and low levels. Using a TR fib for the range, pulled differently for the value area, we can see alignment with the monthly levels. These are the confluences I'm currently observing. Regarding timing, monthly lows for January form, on average, within 12 days. In uptrends, lows tend to form earlier, around 8.6 days, while in downtrends, they form later, closer to day 19. Some lows even form near the end of the month, as the price first forms the high before dropping. Interestingly, the average time to form a high is also around 12.8 days. In uptrends, highs occur around day 13, typically within the first 2 weeks, while in downtrends, highs form earlier, around 9 days on average. What can we take away from this? T for now, observing the first days of the month is key. If price moves down early, hits key levels, shows strength, and starts moving up, we can consider the low in. From there, we assess how far it goes and whether it aligns with timing for other levels. If price moves up first and hits key levels, we look for weakness to potentially ride it down. A ranging month is also possible, where price forms highs or lows within the range, respecting levels and timing. Trading the range could then be the optimal strategy. Watching the lower timeframes closely for clues is essential. Currently, the local structure is bearish, with 4-hour in a downtrend and daily showing structure break. However, if price reclaims certain levels, it could indicate that the low is in, at least temporarily. Finally, let's look at momentum cross levels. Weekly requires a close above 106K to cross up, slightly above the bearish wick formation. The 3-day chart needs a close above 104K, while the 2-day level is at 96K, which aligns with the new monthly level. Daily closes above 92.7K are important, but divergence risks remain. Where price can reject and make a new low while some divergence builds on the momentum. On the 12-hour, we need a close above 92K, while the 4-hour level is around 94.5K. I'll closely observe what price does next. Whether it forms another low, hits key levels, or simply makes a local SFP, or breaks this local structure and potentially holds it as support to reach higher levels. The plan will adapt based on the setups and signs of strength or weakness. By staying vigilant and reacting appropriately, I'll ensure alignment with the bigger picture. Let's see which scenario plays out first and keep an eye on the lower timeframes to stay prepared. That's it for today's update. If you found this video helpful, don't forget to like, subscribe, and share. I'll keep you updated as the market develops. Until then, trade safe, and I'll see you in the next one.